Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Rapstein, and here we are on Friday, the 23rd of September, 2011. The time right now, as I'm looking at my magic gold watch, no less, the 3:30 area. And gold today, my gosh, you think gold can't break. You know, got to warn you, once you see the network flooded with gold ads, I don't know how to say this. When I look back at the housing, and I would go out and you go for grooming, whatever, and everybody's talking. They own a house, they're speculating, and they're making money in it. Got to be careful. Well, gold had that feel up around the 1900 level. I mean, at 1900, I'm watching people talk $5,000, just what you're hearing. The difference between housing and gold is gold still has every story in place positive that it had, whereas housing lost all that. Too much of it. There isn't too much gold. Let's start with that. The U.S. can't agree on anything. You look at Congress, you look at how we try to get through anything, and I use the word anything right now. It is a joke. I mean, you got to sit back and almost laugh at ourselves. It's terrible. So the question is, when you add the sovereign debt issues that haven't gone away, what's going on? Well, gold paused. And gold's pause began when it hit 1793.50 a couple of weeks ago, not just now. And all you're seeing is the eventual reaction. And today's what I like to call margin clerk day. It is the day where those that bought in and couldn't afford to hold on probably had to throw in the towel. Does that mean one day makes a bottom, or that I'm saying there's a bottom here? No, I haven't said that at all. What I am saying is you're back to value areas, and that to me is the important part. This break leaked away. If I take away this, was I not yesterday saying this market's still looking on the weak side? Today you break through. But I want to carry this chart so that you see where you're going. Where I was getting very bullish was the end of July. And I had written reports through the summer saying, you know, folks, the key that I'm looking for is trying to get in this area, looking for a rally that would gain by the end of December, conservatively 5 or 10%. It's in publishing. I can back up everything I'm saying. So the market ran instead and put everything in the next 50 days, 60 days, whatever you want to call it. Now it's taking that out. Nothing's really changed. The people that bought in up here probably just got knocked out of the market, and I think the smart money, the gold play money, is waiting for the market down here. Why? I don't see the stock market getting better. I don't see the sovereign debt issues getting any better. I do expect Greece to get some round of financing now, but I think their December hope and prayer for money, either they're really going to bite the budget with their austerity, or all we've done is put off the inevitable. And I think it's the inevitable, but I think it's going to be a controlled, structured refinancing. But I still don't see anything except the whole world publishing, or the word is printing, more money in some form of program to get economies around the world going. I think everybody would rather reinflate than deflate. I guess that's the way that I feel about it. And in looking at the market, you pull back. This is the general support area I'm looking for. Today was the first day in a long time that I recall putting out through my newsletter buy recommendations, and I'm not going to tell you where they were. You get it through the newsletter. I can tell you that I put one out. That's all I'm willing to say, because I don't give the information here. Take a look at what's going on. The swing line study has been consistently making lower highs. It's been making lower and lows. It's been under the 18-day average of closes. The key numbers I'm seeing it temporarily is 18, 19, 40. Until that's taken out, you just have a pattern of lower lows now, lower highs. The market stalled the lows right here, but then today, actually yesterday, it broke through that, and today was capitulation day, going to the end of the weekend, and anybody long above this area, well, they're caught, and whether they stayed on, I can't tell you that or not. But I can tell you where the 100-day moving average of closes is, and I am a wise guy. And I have been putting this out saying the 1635 area is what you watch. Today it's 1634.60. Today's low, 1631.70. When the 45 didn't hold, here you go with it. That was the next number if you were to break straight down. There was another number in there as well. That other number is the Bollinger Band, and that's right here. It's 1711.70. Now, let me tell you what I suspect. Bollinger Bands are an algorithm developed, by the way, by John Bollinger to keep the market trading within them 95% of the time, but by design, they're allowed to expand the bands in and out 2.5% of the time. Typically, you don't stay more than 3 to 5 days consecutively under or over the band. You saw that back here. You have a way of pulling back in just like you did there. So yes, you can work lower, but I think the combination of the 100-day moving average, the combination of being extended under the Bollinger Band, and just being oversold and not an embedded stochastic is a more compelling story that I think we're going to look back in time and say this was a blow-off, not necessarily the beginning of a market just getting ready to collapse to 1,500. Could it happen? I could be 100% correct. Wrong in my thinking, and the market could go down there. Not correct, but wrong that it's going to go down there. There's nothing here to say buy using a futures contract. Option strategies, however, are a little different because you can slow the game down. You're still bucking wherever that trend is, and however it's going to widen out. Silver is off the chart. I don't know if you're aware of how much silver has fallen in the past couple of days. But it's wild. Today the market's down alone 15%. Now, if you think gold isn't acting better than silver, you're wrong on that. Silver has just let go. And in looking back, and this is what you have to be scared of in gold, too. You had your Bollinger Band, you came out of it, and now you just yanked on it all the way through. Here's a market with stochastics that also aren't embedded. So at what point do you say from even the current high of 44 down to today of 31, it's too much? And at what point do you say, hey, even in one day a 15% drop is too much? What I've learned to do is never, as a futures trader, say anything's too much. But I'm not scared of putting my hands in my pocket and doing nothing. And if you're really bullish on silver, well, it's a heck of a lot cheaper today than it's been. Is it in an uptrend? It is not. Is gold in an uptrend now? It is not. This market is going to count more on world economies, as is the copper market, than the gold. But whenever you get these wide bands, and they widen out like they did here, inevitably you get them turning the other way. When the red line of this stochastic gets over 20, my prediction is you will have made your peak low in copper. Don't know what day it's going to happen. Not interested. I'd rather play after the fact. But you've taken these narrow Bollinger Bands and you've widened them all the way out. And for those of you that don't think there's merit to the 18-day average of close, that when you're under it, you're only looking for sell signals. When you're under it, like in silver, you're only looking for sell signals. And when you go and you can look at this average back and forth and you can see what the market's rallying up to and paying attention, do what you want. The picture tells the whole story. Here's crude. Crude is tied to the stock market. You've broken out of this range. Today you got down as low as 77.5. 75 is probably a number that's in people's heads. Remember what I've been saying. I think you're just days away from OPEC saying, oh, things are getting too bad out of control. We're going to have to cut production. And the world energy market, which is Brent, not WTI. WTI is a specific blend for America, and it's done on a certain area of the coast where they refine it. This is the world market. It's come down, and it's taken a tax off the world. A big tax. Here's a market that was trading just recently, in the 120 area, and now you've got that same market down $17 a barrel. It's a heck of a drop. And eventually, that helps. Doesn't hurt. So keep that in the back of your mind. Before I get too far and I want to finish this up, I want to remind you of our futures trading kit. See these recorded webinars? Try to imagine you're sitting at my side 3 to 5 days a week, and I'm going to go through 35, 40 charts. You'll say, I don't want to go through all that. It's okay. The first group are all the stock indexes. The next group, and I do it a certain way, are the currencies. The next group's going to be the interest rates. Then I'm going to move in those webinars to the meat markets, actually the metals, then the meat market, then the grains, the soft commodities and the energy. Same way each and every time, so you can slide around and see the parts you want. It's free. It's included with the charts. My twice daily oral updates. How do you get access to this? Well, you got to call and talk to my staff. It'll be free to try it. 1-866-973-2077. Or go to our website, www.iraepstein.com, and you can get it to sign up for the Futures Trading Kit there. Here's the market that's been telling a big story, the CRB index. And this is telling you that the commodity play, as we knew it, had come to an end. You'd rolled over. Actually, you peaked out up here in the summer months. Then you came back, fought a battle against your Bollinger Band there, and I'm predicting you're going to look back and say that you got a bit too cheap, and eventually you're going to start rolling to the other side back up very, very soon. In the bond market, all that I can tell you is you're looking at a market today that left people that bought yesterday over the Bollinger top in serious trouble. I'm not saying the trend is down. In fact, this is a market that I want no part of you thinking the short side of, because it's where the Fed said they're turning their attention. And heck, they have more money than everybody. Not only are they going to take money that comes due and put it there, they have a printing press if they decide to keep this down. So you can get corrections, but I don't think you're going to change the trend of that market. With that, I'm Ira Epstein. I appreciate you watching. I'll be here next week with you about the same time. Have a great weekend.